Welcome, this is Mike Hamilton from TradeTheEasyWay.com. It's after the markets have closed on 23rd of July. I want to do the review for the week. Daily dollar. This time last week I was talking about this reversal bar, this hammer, the extreme RSI. It did give us a move to the upside. We did get a close above the 80 EMA, but on Thursday, Friday we rolled over as the market sentiment improved, confidence improved, money came out of the safe haven and back into equities and in commodities. More on that in a minute. As for the next move, I think we will come down through the 50% and over the next few weeks, a month or so, get back down to 80.4 on this bottom of this fib zone. Let's see if the other proxies are giving us confirmation, and they are. We've had a close below the 80 EMA in the 10-year Treasury notes, US Treasury notes. So we've seen a topping action here, distribution pattern here, expecting this to come down to the 50 EMA. The gold. Moving towards a decision on the gold within this wedge. I think we're very close to a decision now. With a dropping dollar, the relationship in a healthy market with the gold is divergent. I'm expecting this to break up, get back up to the 50 EMA to make a nice entry for a long, and to get back up to these highs and possibly further. ES. I've been hearing from a lot of fundamentalists and also technical analysts that they thought this market was dead, it was about to roll over. I said hold your horses, let's the charts tell us the story, and here we are, we're in a box for several days. We now have a close above the box. So were I trading next week, and I'm not around next week, I would buy a pullback to 10.95 and expect this to move at least up to 11.30 and beyond. This is a very, very good play. Once you get into a triangle like this and you get a release, you can tend to get some very, very swift moves. I wouldn't be at all surprised if we get a retest of this area here. That would make it a kiss and tell. But at the moment, this just looks so to have got two very bullish bars. I would just buy a pullback and confidently expect that to get up to at least 11.30. Oil, we had a very, very extensive move on Thursday, very low volume and slack market as traders had taken their profits and kept away from the markets. Probably took a day off on the back of nice profits. Looking for this to break up through 50% at 80.30. Obviously 80 is a massive number in all these markets, round numbers are key. Looking for it to retest 81.62 on the oil. Stocks, they've had a great move. Talked about Lulu in the trading room this morning before the US markets opened. We've got a picture perfect pullback to the 50 EMA, and we got an entry there at 39.50, and we are up to 41.90, so 140 plus points on Lulu. Another one we looked at was BEXP. Really great, lovely pullback to 50. Pullback right, slightly below the 50 EMA, but so 1650 up to 1737. Break through this trendline resistance, close above the trendline resistance. So a pullback next week to 1716 will be a great entry, with a stop just below there. Confirmation of the confidence in the markets for me has come from a sell-off in yen. Yen is seen as a safe haven, and with the appetite for risk returning, might see some evidence of some carry trade moving on. Swissy has been a safe haven, that's closed below the 8. It's been incredibly strong, but that is now selling off. And in contrast, we've got a positive Aussie dollar. I've been talking about that for at least 2 weeks. CAD has now very much moved to the upside in the daily. Pound's had a brilliant day on the back of incredibly strong GDP, and the euro is okay but not as good. Took 140 pips in this market today. This is 15-minute pound US dollar. Took it here on a breakout and pullback in the 15-minute chart. It did give a seller's bar here, but I talked about having a stop underneath the 50 EMA. The 50 EMA did hold, This is way before the news came out. I say it was very close. It was an hour and a half before the news came out of a dramatic increase in GDP. So it moved out before the data and eventually it gapped up. Took half profits here because I by this time had a position from a set up in a 240-minute chart as well as this day trade. So didn't want to get too greedy. Took half off here, left the second half on for this 200% fibs, and then just backed off the market and went out for the rest of the afternoon. Right, took 110 pips in the US dollar Swissy. Why did I trade the US dollar Swissy? Let me show you the 240-minute chart. This is where I took it. Double bottom, close above the 8 and the 20. Took it here and got 110 points moved to the upside. It was a fibs target up there. Look, major resistance up there. Had my first target up there. I'm still in my second half and it's looking very, very good. So I'm going to hold that second half. I've got to stop to break even. So not really worried what this does next week while I'm away. I will see what happens during the week. Obviously I'm in contact. Watch out next week for this euro yen. If we get a close above this area here, 113.46, buy a pullback because that's heading for 121.2 on the euro yen. Pounds very, very bullish. Had this big extension to the upside. It came back to the must be the 20 EMA, broke up through the fibs area. We're now above the 200 EMA. I would buy a pullback at 153.80 and my target at the top of that channel and the 127 extension at 156. Euro dollar, can't even see it, can we? Not touching it, it's just sideways. Hence the reason why I think with the pound strong and that euro pound moves below the 50 EMA, I think that is a good setup. Just have a look at the daily, just quickly back to that daily on the US Swissy because we didn't look at that. We've got a close above the 8 now, so a pull back to 105.15 and you've got the potential to get back to that 20 EMA, but there are much better charts out there, so I would not trade that if I were you. You could try and get a pullback in the 240 minute, but there's some far better charts out there for swing trades, so I would look elsewhere. On the Aussie dollar, US dollar, talked about this over the last couple of weeks a lot. Waiting for this breakout. If you're not in this, stand aside. But we are through the fib play zone. We're above the 61.8%. This is heading back to 94. I know some of you in it. Well done. Just manage your stop. Keep your stop. Now at the moment, for me, I will keep my stop below that 80 EMA. And as this starts to continue to move to the upside, I would keep my stop in the stop zone. For example, if we got an open close above 90, you could just keep your stop down here, just give it a little bit of gap. You could get a stop much closer on this one, as we had an open and a close above this area here, but you give it plenty of room, keep your stop below the 8. But it's your call, it's your preference, you make the decision, but that's what I would do. Just keep it out of trouble, give it room to move, because this looks very, very good. Right, that's all I've got for you. Hope it helps. Lots of setups. Email me with any questions. I am in email contact. No videos next week, but we've got the monthly review on the 1st of August. We're going to look at monthly charts. We've got a great guest speaker, has written a fantastic book on trading commodities through the last commodity asset bubble. So we've got 1 or 2 other speakers as well. So if you haven't registered for that, go on to tradetheeasyway.com, go to the last page on the site, the bonus page, and there is a link for registration. If you're not registered, you won't get the login details. Hope that helps. Thanks very much. Bye for now.